Hey guys, and welcome back to another video on the channel. If it is your first time here, my name is Brandon, and as always, if you're new to the stock market, if you're a Canadian that's looking for some extra help, click that first link down below to learn more about our investing academy. But in today's video, the topic we're going to be discussing is, should Canadian investors be buying US stocks right now? Should we be going out and investing in the US market, seeing how our Canadian dollar is quite weak, is quite low at the moment? This is a question that I'm getting so much on the channel these days. That is what we're going to be covering today. If you stick around to the end of the video, I'll share with you guys kind of the way I approach investing in the US market as a long-term investor, but we will start with the very basics. We'll start with the ground floor here because it can be a little confusing how this whole currency exchange deal works in the stock market. As a Canadian, you have the option, at least if you invest with like a broker like mine, we use Questrade here, it's a Canadian-based brokerage, but you can go out and buy Canadian stocks. You can also go out and buy US stocks. In fact, you can buy stocks pretty much all over the globe these days, but the two major markets here for Canadians would be Canada and then US. Now, if you wanted to go out and buy a stock like Bell Canada, if you want to go out and buy a stock like Royal Bank or Canadian National Railway, which are Canadian companies, that's quite simple and easy because those stocks trade on the TSX, the Toronto Stock Exchange, which is the Canadian stock exchange, and they trade in Canadian dollars. So there's not really all too much to think about there. If you wanted to go out and buy a stock like Nike or McDonald's or pick a US stock, Apple or Amazon, those actually trade on a US exchange. So this is where you hear of the New York Stock Exchange. This is where you hear of the NASDAQ. And of course, because these are US companies, these stocks are traded in US dollars. Now, if your brokerage account or platform that you use to invest is very similar to what I use, it's a Canadian dollar account, you can go out and buy these US stocks, you can absolutely do it, and your platform is gonna charge, your brokerage, online brokerage, is gonna charge a slight fee for doing that conversion. Now, you can go out and have a separate US dollar account, but the way that I invest is we have our Canadian option, and when you wanna go out and buy Nike, when you wanna go out and buy Apple or Microsoft, they take a fee. It's usually between 1.5 to 2% depending on the platform, but that's right in the ballpark of what you'd expect. There is a technique that you could look into. It's what's called the Norbert's Gambit. This comes in particularly handy when you are, this is just a side note, when you're dealing with bigger chunks of money and you're looking to buy US investments. I don't have a video up on this quite yet, but I will in the future. But for now, let's assume that, let's strip out the fees, okay? Let's not talk here commissions. Let's not talk about that 2% conversion fee that they're going to charge you. Let's talk about the conversion rate and really understand how this impacts our investments, because that's really the main takeaway, the main topic for today's video. And it goes without saying, but let's just give an example here. If you had $100,000 to invest and you wanted to invest it in, let's say, a couple of those Canadian stocks that I mentioned, you could take your entire $100,000 in cash and go out and buy $100,000 worth of these stocks, all in Canadian dollars. Now, if you wanted to go buy some US investments, some US stocks, based on today's current rate, that $100,000 would get you right about $70,000, $71,000 US dollars worth of assets. This is, again, of course, factoring out commissions and without fees. This is just the Canadian to US dollar, looking at that relationship there. Now, let me address something right off the bat, which is such a common mistake that I hear, such a common thing that's just is so wrong when some people say this. I'll often hear, hey, why would you invest in US stocks? Because you're immediately losing a third of your money, right? I can't go out and buy US stocks because I'm getting so much less for my Canadian dollars. It just doesn't make sense. That is not the right way to approach it. Think about it this way. If you had $100,000 to start with in Canadian dollars and you went and deployed that all into McDonald's stock, that would be ballpark, as of filming this video today, as of these numbers, right around exactly $71,000. So your investments would be worth, as of today, $71,000 US dollars. Now, if you fast forwarded a year out, or let's just say, for the likes of this example, a day later you decided to sell all of your shares of McDonald's that are worth $70,000 USD, when you sell those and convert them back to Canadian dollars, you're no worse off than you started. You're back up at $100,000. Of course, this is factoring out the transaction fee and then of course commission costs. But yeah, like let's just establish that right off the bat. It may look like you're losing money. It may look like you're investing a third of your Canadian dollars, but your assets are still priced in US dollars. Your shares of McDonald's, your shares of Coke, your shares of Apple, those are all US dollars. And when you sell them, you're actually going to get a bump back in the amount of cash that you get in your portfolio when you do convert back into Canadian dollars. So just get that out of the way. That doesn't really matter there. Now, how does the exchange rate then come into play? And this is kind of getting into the real meat and potatoes of this video. This is the important part. Let's run through that exact same example and assume that your $100,000 got you 70K worth of McDonald's stock. Now, if we fast forward a year out and nothing changes, this is scenario one, well, that's completely fine, because then we can sell our 70K worth of McDonald's stock and we can convert it back to $100 Canadian dollars cash. All is good. Now in scenario two, if the Canadian dollar gets stronger, if the Canadian dollar appreciates relative to the US dollar, we come back a year from now and we go to sell our 70K USD, well, that's actually gonna convert back to less Canadian dollars. Because our Canadian dollar got stronger, that 70K USD is no longer gonna get us the 100K, it's actually gonna get us less. Now in scenario three, we can look at the third example, the third possibility, in that the Canadian dollar actually drops from where it is today. This is actually a good thing for our investments, because that 70K USD, again, in all three scenarios, nothing has changed with the share price or stock. It's still 70K, but the weakening of the Canadian dollar, when we convert things back, this is actually a bonus. This is a benefit for us as a Canadian investor, because we end up with more money than we originally started with, all thanks to the exchange rate. And that's why the fluctuations, they do play a pretty important role. And that's kind of why we're getting a lot of questions on this, because if we do look at, like, here's just a chart of the, I guess, historical patterns of the Canadian to US dollar exchange rate, we do see that we are at a pretty low point. We're at a very low point here, in fact. And if what I've been saying thus far in the video has made sense to you, if you're kind of understanding what I'm explaining here, the question we need to ask ourselves as Canadian investors is we need to look at where we are today and kind of project out and say, hey, where do we think the dollar is headed? Is the dollar going to strengthen? Is it going to be bad for our investments? Is it going to stay the same? Is it going to weaken and be good for our investments? I'll first of all come out here and say, if you're looking for an answer from me on that standpoint, you already know my answer to that. It's I have no clue what's going to happen with the Canadian dollar. That is something that I will never try to speculate on. Really, in general, when it comes to things like this that are beyond my control, the stock market, economics, or the economy, I don't really bother with that. I kind of sit back and let go. If I had to place a speculation on things by looking at this chart, I'd probably go as far as saying, yeah, it's much more likely that our dollar will strengthen and it will be bad for our investments, but we don't know that for certain. And even if it is, this is really where I want to kind of tie this video together and really just share with you my approach and kind of finish things off. Even if the dollar is going to strengthen, the Canadian dollar, and this is going to be bad for our US investments, does that mean that we should be avoiding them right now? My answer to that, at least personally, is absolutely not. There's no way that we should be pulling out of, in my opinion, the greatest overall market with some of the greatest companies in the world because of this weaker dollar that we have going on right now. This is something that if you invest, and as we invest over long periods of time, if your outlook on investing is anything between 10, 20, 30 years, like most of us here watching, no matter what your age is, if you have a 20, 30 year outlook, we are going to go through periods of time where our dollar is weak. We are going to go through periods of time where our dollar is strong. Like anything else, it fluctuates. And a major benefit of being a long-term investor is that you don't really have to worry about this all too much. And I'm saying that we need to be cognizant of it, but we don't have to be nearly as focused relative to a trader, somebody that's taking these shorter term positions. If you know for a fact you're gonna be making a trade over the next week or month or just short term, a big flux in the exchange rate, well, that could really impact your investments. Now, over a 30-year investment period, let's face it, there are going to be times where it works in our favor and helps us out. There are going to be times where it works against us, but that's kind of just how it works in the process. Now, would I say now, yeah, if you have the option to go out and pick a Canadian stock over a US stock, that's kind of the camp that I'm in. I'm not avoiding US stocks whatsoever, especially with the broader market being down and let's call it deals across the board, if you want to look at it that way, and hey, there may be more to come, I wouldn't let this exchange rate deter me from going out and investing in a really good US business. But at the same time, if there's two comparable ones, yeah, I personally, again, not making a speculation here, I mean, I guess it kind of is, but not really. I'm personally looking, first of all, for what Canadian options are showing value, but it's in no way deterring me from investing in, again, the most powerful market, in my opinion, in the world. I have a bunch of companies on my watch list that are from the US, and I hope that kind of shed just a little bit of insight into the way that I'm approaching it. A lot to kind of think about there, guys, and hopefully that was able to give you a little bit of perspective on how things work. And I guess you can now make a decision yourself. You can speculate on where the dollar's headed, what's going to be going on with that. My main takeaway to finish and summarize this video is, have there been better times to buy US stocks? I think absolutely. Is this deterring me from buying US stocks? Absolutely not. Just think about that over a long period of time. Sometimes the dollar will work in our favor, sometimes it won't. Not telling you what to do or what not to do, but that kind of wraps it up for today's video. Kind of all over the place here with this ending, but if you enjoyed, feel free to give this one a thumbs up. That is an awesome way to support the channel. And if you are new here, you can hit that subscribe button, because we post videos on the stock market every week, usually a couple videos a week. Like I said in the beginning, if you are new to the stock market, if you haven't got your stuff set up, or if you just want to take the approach of the do-it-yourself approach, we're working with Canadians every single day, taking them through the entire process from start to finish. We'll help guide you through, help you build your portfolio. That's what we call our Investing Academy. You can learn more about that down below. But as always, I hope you guys enjoyed. I thank you for watching, and I'll see you in the next video.